Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 67.5 to 69.5 as the micro bull bear zone, and the break below that area resulted in some short-term liquidation down to 61.5, but then ES started bouncing again. And despite the weakness in TF, which actually broke below its recent lows and went all the way down to 1135, ES and NQ continue to hold up relatively well, and they continue to simply trade within a range, not really putting in any big directional moves one way or the other. Considering the downside break in the Russell, you would expect a little bit more weakness in the S&P and Nasdaq, but so far both those markets have been holding up really well, and that's something to keep in mind. So heading into today, we are going to continue using the 67.5 to 69.5 as the micro bull bear zone. Holding below it tells us that there is some short-term weakness in this market, but holding below it doesn't necessarily put sellers in firm control. And ES could simply balance in a range if Russell does not sell off any more than it already has. In the Russell, we have support 1133 to 1135, and if it heads down there, finds buyers yet again, starts bouncing back up, this could just be a market that stays stuck within balance and doesn't really make a big move one way or the other. And it's something that we're going to have to gauge in real time, because if a liquidation move starts and we start breaking below 61.5 to 63.5, then we want to be more just focused on the short side and look for a move down towards 51 to 53 and potentially 45 quarter to 47 quarter. But at this point, we would have to, break below 61.5 to 63.5 to really confirm sellers in control, because the overnight session is very balanced. It's balancing at lower prices, but overall, there isn't really any big directional conviction. This is not a panic type market, because when you have true liquidation on high volume, you don't put in any big bounces back into the overnight midpoint VWAP and retest the balance multiple times. So just the fact that ES and NQ continue to bounce back up towards those areas and continue to test the breakdown spots, it just tells me that this is not an extremely weak market, and it does call for some defense even on the short side. Now, if the move starts and once the market opens and we have the Philly Fed survey out at 9 a.m. Central, once the econ's out of the way, if it starts liquidating, then we'll be prepared for it, and we'll be watching TF to make sure that that's continuing as well and it's breaking below 33 to 35. But if the market doesn't really go anywhere, or if it holds 61.5 to 63.5 and just kind of chops in a range, with options expiration, it may not go anywhere. It may not make that big of a move, and we could end up with a market that simply remains stuck in balance, where 61.5 to 63.5 holds, and we get a movement back up to 67.5, 69.5, and then potentially up towards 71, 72, and we just kind of go sideways. And you have to be careful in those markets where you think a directional move's about to happen, but then nothing really materializes. In this instance, I think it's better to just be extra selective. And, the first test of the zones are producing some nice rotations. They're producing a nice reaction. But if that reaction doesn't really go anywhere, right? So, for example, if we pop back up to 67.5, 69.5, and we just kind of chop around, we don't really go anywhere, then you want to be more defensive with your position, which means if it comes back to your entry, perhaps take that break-even exit and then look for the next setup, because the market could be heading back up towards 71, 72, and potentially even 74.5 to 76.5. Now, in the event that TF actually finds a strong buyer and starts rallying, that upside scenario of breakout is still potentially possible. If we start holding above this micro bull bear zone, and especially above 71 to 72. So, first test of these zones, we can still expect rotation, but, be flexible in the expectations that you have going into today. And, personally, I'm not going in with any rigid expectations of, a big downside move or a big upside move. But given how weak TF has been, if the downside move starts, I'll be ready for it. But I'm not going to really be anticipating a big move heading into the market, heading into the open. I think you have to be a bit flexible when the market is trading within a balance and just trading within a range. And if you're not getting good location, skip the trade. If the market heads down to support, and let's say you're short, and it starts bouncing, and you start getting some better momentum, get out of the way, or even reposition yourself to take advantage of, an upside move. So today is going to require more flexibility. This market is lacking directional conviction, and when that's the case, you have to be more flexible. So if you want to focus on one side, then just pick your spots. Focus on entering at the zones, and manage your risk accordingly. Otherwise, let the market kind of tip its hand. Look at the context of the day. Are the internals extremely negative and getting lower, or are they just kind of balanced? Watch the NYC tick. Is it balancing between minus 6,700 plus 6,700? If the tick is behaving that way, then we're probably still going to be balancing in a range without any big directional movement one way or the other. So today is going to be more about analyzing and interpreting the market action in real time, especially after the 9 a.m. econ reports out of the way. And based on what the market's doing at that point, if it is showing you a lot of downside bars, wide range bars on the downside, then focus more on the short side and be more selective on long setups. If we break 61.5 and especially 58.59, then just step aside. Don't start fading it, because then you could be looking at a liquidation move down to 51.53, and the swing low here at 45 quarter to 47 quarter. So today is really going to be about identifying what type of day it's developing to be, right? Is it a trend type day or a liquidation type day, or is that kind of a continuation of the theme of no directional conviction and just balancing in a range? And if it is balancing, then we'll look for some fade setups. We'll try to be on board for the direction that we're seeing more momentum in, but at the same time, we are going to play more defense. We are going to take that 2.5, 3-point scale out to manage our risk a bit more closely. And once there is more directional conviction in this market, and once there's a clear break, then that's the time to really press the trade and hold for some bigger winners. But you have to adapt to what the market's doing, and right now you can see that it's basically just stuck in a range. It hasn't really gone anywhere, and despite all the weakness in TF, it's holding up so well that if TF gets a lift, then ES could move significantly higher. So those are the thoughts heading into the open. Let's see how well the buy side can hold up in S&P and NASDAQ. Let's see if that downside flush in TF is done, and if it can now start heading higher. If you're watching TF, keep an eye on the 1140 to 1143 area. That basically marks some of the recent lows. And if we start trading above that area in the Russell, then that would be another indication that this market is unlikely to liquidate and head any lower, and the downside could short-term be done. So those are the main ideas. Let's see how the market plays out this morning and take it from there.